Good morning, good afternoon, good evening, folks. It's not Monday, it's Thursday, but we have the one and only Mr. Greg Dickerson with us, so we can talk about all things that are going on in the market this morning. How you doing, Greg?
Doing great, Michael. Good to see you.
Nice to see you as well. Thank you for stepping in. I thought we should have some conversations. It's an interesting day today. The day is different. Russia invaded Ukraine. Obviously, a lot of the things I've seen on TV are frightening and scary. So I thought we should realize that in the chaos, there's lots of things that can happen, right? I remember investing around 9/11. I remember the shock and awe of invading Iraq, and we've seen things like this, but predictably, people rush to cash, right? I think we're seeing a lot of that now. The 10-year Treasury is down. Lots of things are being sold off, but I thought I would ask you, when these terrible events happen, kind of what do you do from an entrepreneur? How do you step back? How do you stay level-headed?
Yeah. So first and foremost, thoughts and prayers to, the people of Ukraine and the people of Russia that did not want any part of this. I think 70% of the Russian people did not want this. So this is squarely on the shoulders of Putin. So, thoughts and prayers out to the people that are all, dealing with this right now. It is a tough time over there. Mm-hmm. But yeah, we've seen wars before. We've seen crisis. The United States got attacked in 2001. And we've seen, from a financial market standpoint, what happens. Generally, you're going to get some sort of a sell-off, knee-jerk reaction. And then generally, there is a chart out there. I showed it. I made a video earlier today where I showed the chart. And I think the worst was Pearl Harbor. Markets dipped like 19%. When the United States was attacked in 2001, I think markets dipped about 10%. And then when we invaded Iraq, markets dipped around, I think it was 14%. I don't have it in front of me now.
Yeah, I've seen the chart. Yeah, that was, yeah.
And then other world conflicts, 5%, 7%, things like that. And I think the average time was about 22 days to the bottom, and then it rebounded within 30, 45 days. So I think this situation here, hopefully it doesn't escalate further, and that this can get resolved quickly, and the world can continue to move on and avoid any further escalation. And if that's the case, again, you're seeing a lot of algorithmic trading. You're seeing a lot of just rotations, and you're just seeing investors take it off the table in the interim to let the dust settle and then jump back in. So markets. They're back up a little bit. They started selling off last night. They were down this morning. They've already snapped back a little bit. They'll probably come back a little bit more towards the afternoon. The key is momentum into the close. That tells you what investors are really thinking. Are they buying or selling into the close? And, that'll give you indications of what's coming down the pike. But we've seen, really bad times before, and markets, always snap back. Again, bad times never last. Good times never last. This is different. This is a serious situation, and hopefully it will not escalate. But until we understand that, we don't really know where the markets are going. And then you can see the flight to safety. It's cash. It is the dollar. It's gold, oil, because of the speculative play there with the situation in terms of the sanctions affecting the oil markets. Yeah. But what's down? Risk assets, and cryptos, Bitcoin, risk assets. They're down. A lot of people were saying that Bitcoin could, go up because of this. Absolutely not. It's a risk asset. Russia owns a lot of Bitcoin. That's part of what's going to help them in crypto. That's part of what's going to help them get through the sanctions. They've been getting rid of the dollar. They own a lot of gold. They own a lot of crypto.
Yeah, they're also one of the largest producers. I think I read yesterday, the second largest producer of platinum and palladium, right? So they have, they've been stockpiling, right? I think they kind of, at least Putin knew what he wanted to do. Yeah. The other thing that I was looking at this morning, because you and I have talked for the last, 4 or 5 months, that at least I'm particularly nervous about the Fed, not necessarily stopping taper, not even really raising rates, but there's that $9 trillion balance sheet that freaks me out. One of the things I looked at this morning is the Fed actually has an opportunity today, if they want it. What do people want today? You just said it, right? A flight to safety. They want cash. They want treasuries. So if the Fed was thinking ahead, am I just out to left field thinking that if they wanted, they could reduce their balance sheet by $1 trillion or significantly in a 3, 4, 5 day period if they were thinking ahead? Is that reasonable to think about, or am I just missing something?
Yeah, they could potentially, and they could control that narrative and that cost and release tranches of treasuries at a certain level. So yeah, they could absolutely do that. There's pontification now. Is this going to be an excuse for the Fed to kick the can down the road further and not do anything in March? And I don't think that's the case. I think the Fed is still going to have to take action in March. The action may be different than what they were thinking before, but inflation's out of control. It's going to get worse with this situation because of the energy impact. And they have to act. They can't not act and just kick the can down the road. So a lot of people think they're not going to do anything. They're going to do something, and they have to get inflation under control, and they have to act, and they have to unload the balance sheet at some point. So yes, this could be a good opportunity for them to do it. I think Russia's off the table from buying our treasuries, but I think the rest of the world, sovereign wealth funds, investors are looking for good long-term safe haven for capital. So this could be an opportunity for them.
Yeah, I think it is an opportunity. Again, it's sometimes there's opportunity in chaos, and I think this is one of those where I think the Fed really could do a trillion or two. They have to do it orderly, of course, but people are clamoring. I mean, look at rates. I mean, they were down like a tenth, right? 10 by 0.1, not 0.01, just in the last 12 to 16 hours. So the Fed has an opportunity to reduce their balance sheet. And then let's talk about March 10th. Because I've been saying for quite a while that half a point was the right answer. It got as high as 99%. It is way off that this morning. It's something in the low 20s. I've always said, Greg, that I think the Fed needs to shock the market. And I think doing a half a point in March is still the right answer, although I feel a lot less confident today. But if they do a half a point, they don't have to continually raise. I think if they do a quarter point, they're still behind, and it will be just successive meetings of quarter points. It's kind of like ripping off the Band-Aid slowly. My hope is they do a big rip. The market doesn't expect it. The Wall Street throws up for a few days and we just move on. What do you think?
Yeah, I think at this point, there's limited downside if they come out with a half a point. The market's already paired off so much that, it really won't be that dramatic of an effect. Maybe it goes down another 5 or 10%, but the Fed's resolve will not be tested with something like that. I don't think they're looking at the markets as much as they're looking at the consumer at this point. And especially with what's going on, with the global situation, inflation is the key issue. It's affecting a lot of things in a lot of areas that will affect growth. And then you have a double-edged sword where you get into stagflation. If you have high inflation, low growth, rising interest rates, that creates the trifecta that could really put the economy into a deeper recession. But as you saw, employment numbers are decent. Earnings have been decent for some companies. Sales have been decent. We'll see what the CPI looks like next week, but I think is it next week or week after next that comes out?
Yeah, I think it's the week after next, but yeah.
Yeah, it's going to be a lot higher than what people think.
Yeah, I think the Fed has a small window where they could really show a backbone. They could lower the biggest fear we all have is the Fed's going to unload their balance sheet unorderly, a la 2018 Q4. They have a perfect moment where they can shrink that. They also should come out and show that they have two mandates: full employment and stable prices. Well, full employment, you saw this morning, pretty good. Stable prices are anything but. They need to come out with a half a point, shock the system. The market doesn't expect it, and that's a good thing. That's really how Paul Volcker beat this thing way back in the early 80s, is he did things that the market wasn't expecting. Paul Volcker was not interested in double speak, right? Telling the market what was coming. He just did it and let the chips fall where they may. So hopefully Powell is listening.
Yeah. I think they're going to have to take that stance now. And I think they've given the markets enough warning to take enough chips off the table to earn their profits. That's why we've seen the gyrations in the market, the volatility, a lot of money to be made there. So they've given the market ample warning that we're serious this time.
Yeah. Very cool. Well, do me a favor. People need to be following you on YouTube because you put out a lot of great content, very in the moment, in the time. So what is the channel?
Yeah, it's gregdickerson.com. Go check it out. All my YouTube information is there. YouTube channel is Greg Dickerson, easy to find, but it's also on my website, gregdickerson.com.
Thanks, buddy. I appreciate it.